Hey everybody, it's Jake Catskill with the weekend market update, or the midweek market update, because it's apparently a Monday here. Coming to you live from Jersey City, and here's the thing. What happened with the market last week? It was down. Hasn't been down for a long time, but here's what happened. If you look at, basic market indices, like let's take SPY for example. It's the 500 biggest stocks in the market and what they do. So last week, SPY went down and almost tested the 50-day moving average. It broke through the 10-day moving average, didn't quite get there to test the 50. On the other hand, the Qs, which is the Nasdaq 100 Composite, actually tested and broke through the 100-day moving average. The 50-day moving average. Now, why did it do that? There's a couple things. Well, the week before, and I'll show you this in some graphs in a little bit, the volatility index, or what we generally call the VIX here on Wall Street, went up and hit higher levels, and so did the market. The market actually hit all-time highs, and the VIX went up at the same time. Now this, as we know, is a pretty unusual phenomena, because generally when the market goes up, the VIX goes down. But in this case, the VIX went up and the market went up. I'll show you this in the graphs in a minute. The other factor, and I think this is a considerable factor, is 2 weeks ago, Apple's stock split, right? So, a stock split doesn't change the market capitalization of the stock, but it allows people like those who use Robinhood to buy the stock a little bit cheaper. What does that do? That floods investors in, and that was a trap set by Wall Street. Plain and simple. Apple's been down 10% since the stock split, and that's what killed the markets last week more than anything else. Why? Because Apple is in the Dow, Apple's in the Qs, and it's the second most heaviest weighted stock in the S&P 500. So when Apple goes down, it drags all the markets down. Okay, so that's one part of it. Now we come to SoftBank. You might have heard of this story. You might not even know what SoftBank is. It's a large Japanese bank, and they made some questionable trades because, apparently their philosophy is, we're out here for the next 100 years, and we'll see what happens. But, per their quarterly filings that were released last week, they were actually buying calls in the Nasdaq. What does that mean? They artificially propped up the markets. They took their money. They made a good trade. Hey, I wish I was there. I wasn't. But now they're getting out. What that means is they're taking profits, and that's why the markets are going down right now, because they made their money. The markets hit all-time highs, and now we're sitting here going, okay, everybody that followed them is left with the bag. One of the oldest adages on Wall Street is, there's a very small door and everybody's trying to get out at the same time. And that's what happened last week in the markets. Let me show you some charts. All right, so here we go. So here's SPY as of tonight. And you can see here, this is the 10-day moving average, and here's the 50-day moving average. All right, so SPY came close last week to testing the 50-day and bounced a little bit before that. It's currently holding right around this level at 333. But if you look at some other stocks or some other indices, here's the Qs. And what the Qs did, very interestingly, let's pull up the chart here. Oops, I don't want the summary. Sorry about that. Here's the chart. And the chart says, oh, okay, so last week, the Qs actually tested the 50-day moving average, went above it, closed below it on Friday, and today managed to rally a little bit. And see this? Here's the 10-day. We're getting real close to that. And then if you look at the small caps, here we go. IWM, which is the one I track. I think there's another one, but here's the chart. And guess what? So it closed below the 50-day and then twice. And then today it bounced above it and hit the 10-day moving average. You know, this is some concern because it stopped right there. And, you know, just to give you the full look at it, we're going to look at this chart right here, which is the VIX. And last week, all right, you know, this looks interesting, but here you go. Last week, the VIX spiked up right here. And then over here, you can see a couple days before that, when the market was hitting all-time highs, the VIX was trending up. It's gone down a little bit right here, obviously, as you can see from the trend. But here's the point. The VIX doesn't usually spike along with the major indices, and that's a problem. And what we're looking at here is, you know, that SoftBank position that's being taken out. Now, you know, you might think that's a problem, but, you know, all they're doing is taking profits. That doesn't mean anything else has changed. It just means they're taking profits. And if you were along for that trade, good for you, because you made some money. But that's what's happening in the markets right now. This week is going to be interesting for two reasons. One, it's a quad witch on Friday, which means there's lots of options expiry. If you haven't looked up quad witch, you should probably do that. And on Wednesday, of course, the Federal Reserve will announce their latest meeting results, and we'll have a press conference. So that's for the week ahead. And you know, my think is they're not going to be doing much. So you have to look at two things on that. You know, there's two ETFs that cover junk bonds. You know, one of them is, you know, nicely titled JNK as the ticker symbol, which is a junk bond ETF. And the other one is high yield grade, or HYG. And since the whole crisis started this year and the Fed's been taking action, they've actually been buying both of those ETFs to prop up zombie companies, you know, mostly that are in the Russell 2000, represented by the IWM index. And so what we're dealing with here is pretty much how much can the Fed do to prop those things up. And that's what they're going to be talking about at the meeting this Wednesday. And that's, you know, important for investors, because whatever happens at that meeting, you know, you'll see the results in JNK and HYG. And it could go either way at this point, folks. They could prop it up and the market could keep going up. You know, I'm not set on this one way or the other. It could go either way. We have to wait until that meeting happens and see the results from that, and we'll see what goes on. You know, the other thing that's important to note is last week we had two bond auctions. One was a long bond, you know, a 20-year bond, and one was a 10-year bond. And they were both poorly subscribed, meaning a lot of the primary dealers didn't want to get in on the auction. So the demand for all the debt that the government's putting out and the Treasury's putting out on the market is starting to fall off. I thought that would spook the markets a little more than it did. I think it spooked the markets a little bit last week. But, today we had a little bounce back. We'll see what happens with the Fed. And those are the major issues. I could talk about the virus. I could talk about China. I could talk about geopolitical risk. I could talk about internal political risk. None of that matters right now. It's all about what the Fed does this week and what the bond markets say. Anyway, thanks for coming. I hope you enjoyed this presentation. If you have, any comments or whatever, please put them up there. And, I'll see you next time. Have a good night.